Welcome back to Perpetual Cash Flow. I'm your host, Brad Bennett. This channel is dedicated to unlocking your maximum wealth potential. Today I have TJ with us. He is the owner of InsurePro. We're going to be talking about how your P&C coverage is protecting you not only from the auto body shop, but also your other assets and potentially future cash flow. What got you into the business? Because nobody grows up saying, I want to sell auto insurance.
No, there's a few of us unicorns out there, but what got me in? I was in college and I decided to do an internship. I did an internship with an insurance company, a different type of, not PNC, but more life insurance, group life company, and just saw how beneficial insurance can be for people when bad things happen to them. So as I graduated college, I thought this might be a great way that I can help other people and contribute to society. So yeah, that's what got me into the business. And then the rest is history. I've been doing that ever since.
All right. So what's kept you in it all these years?
Yeah, great question. Probably the thing that I love most about my business is I get to be a small part of the solution when bad things happen to good people. So everybody thinks never going to happen to me. It happens to the other guy, but I am in the unique position that I get to see it every day. Unfortunately, but what gets me up and helping people is knowing that I can help solve that and get them back to a sense of normalcy when those bad things happen. So that's why I do what I do.
That's awesome. Now, from our conversation and how you've structured things, you haven't really gotten some of the same phone calls that I've heard about over the years, where somebody causes an accident, they call their agent and they're like, hey, can I up my coverage?
Those actually.
You have had them. Okay.
Yes. Usually people don't tell me that they've been in an accident. They just say, I want to increase my coverage, or I want full coverage on my car. And then you find out the next day that they want to file a claim, ironically.
For yesterday.
Yeah, exactly. So I get those calls all the time.
Can you do that?
Legally, no, actually. There's a thing called insurance fraud. So they will investigate if they find out that you're trying to defraud an insurance company out of money. You can be penalized, I think, for a misdemeanor, which would be a smaller one, $2,500, or even up to a year in jail time for that, which doesn't seem worth it to me, but people still do it. But I mean, insurance companies hire great investigators. It's, often hard to have that scenario play out in your favor because they're going to have a timestamp of when the accident happened, the witnesses, and so forth. And so it gets difficult to defraud the insurance company.
What would your advice be for the individual that says, I'm going to save me some money on the policy? Then when something happens, they want to look back and say, maybe I should get more coverage.
Yeah.
What would your advice on that be?
My advice would be to plan ahead. Bad things happen. I see it every day. So plan ahead for the future and be prepared for the worst. Hope for the best, but be prepared for the worst.
So in a perfect world, if somebody sat down and said, I want to make sure I have the moat properly structured so that everything is protected, what is the ideal structure that you would lay out for them?
It's going to vary based on the client, because every client's assets are different, right? So they need to know how much assets we need to protect. To kind of blanket it, I would recommend everybody have as high limits as you can buy on your auto insurance, very high limits on your liability on your home, and purchase an umbrella. Most people don't take the extra step to buy an umbrella. It's incredibly inexpensive for what you're getting. It's the cheapest attorney you will ever pay for, and it's going to give you a ton of extra protection. So in a perfect scenario, I would say everybody needs an umbrella at a bare minimum.
That's one of the things I talk to people about. I don't do PNC, never have, never will, in understanding that frontline protection from, because what happens when somebody, say they've got the state minimums. State of Utah, it used to be $25,000. I don't know what it is today.
Still 25.
Still 25. All right.
Yep.
So let's say they cause an accident. They've done more than what their policy covers. What happens in that sort of a scenario?
Yeah. So in the scenario, they're underinsured. So in that scenario, the insurance company, if the client's liable, is going to pay out their limit. So 25,000. Everybody's probably very aware that medical costs have gone up dramatic. You can't go to an ER and come out with $100 bill. It's going to be in the
Right.
thousands, even if they do nothing. So, I mean, medical costs are through the roof. 25,000 these days is just not enough to cover people if they're injured. You're talking about an ambulance ride, time in the hospital, maybe a surgery, pain and suffering settlement if they hire an attorney, time away from work. I mean, all these things add up. So we see claims often settle for 200,000-300,000, and so in that scenario, someone would have to make up the difference. So the insurance company is going to pay 25, and the difference is, they're probably going to get sued by either the party that was liable or by the insurance company, the other insurance company that picked up the difference.
So when the other, in essence, if you don't have sufficient to cover what's happened in the accident, in a sense, you're self-insuring. You're assuming that risk and agreeing to pay whatever is left over. So
yes.
If there's $200,000 in medical bills, the insurance company cuts a check for 25, and you get to pick up the tab for the other 175,000.
That is correct.
Okay. So by doing so and in going with those bare minimums, what you wind up doing is putting your other assets at risk, whether it's home, bank accounts, future income. You've agreed to put those up as collateral for not having the coverage necessary, in a sense.
Exactly. So bank account, any toys, assets like cars, vehicles, boats are going to be at risk. Obviously, savings account, and you nailed the big one, which a lot of people overlook, and that's future income, right? That's a huge asset that people don't often think, well, I don't have many assets, but you have the ability to earn an income for the next 20 or 30 years or however old you are, right? So that is a massive asset that people often overlook. So and it is added exposure to potential loss. So each state has their own guidelines on what assets are susceptible to loss in a liability claim. Typically, most states try and guard 5 items to give somebody a pathway to being substantially or have the ability to get back to a contributing member of society instead of filing bankruptcy. So some of those are going to be like their primary home. They're not going to probably snake your primary home, although depending on how much value and equity you have in that home, that some of that could be at stake. So I think Utah has one of the most lenient laws. There's, I think, 5 states, and Utah's on the list for the most lenient, which means you have the most assets at risk in Utah than many other states. Yeah.
I just learned something new. I didn't know that we were one of the 5 most lenient, which makes sense based upon personal experience. We'll talk about that a little bit later on as to why some of these things were a part of the conversation and in some things that happened in our family about 6 years ago. You mentioned maximizing your homeowners or renters. What are you talking about in maximizing those coverages?
Well, there's many components to that, but probably the biggest thing is your liability. So that's where you have the most exposure to lose your assets, not only partly your home, but all those other assets that we just mentioned. So having a good liability policy that's going to protect you. Auto liability, that's going to protect you if you're in a car accident. Home liability is going to protect you in any other situation. That could be at your home or away from your home. So you have a dog bite, that's going to be a homeowner's liability. Or you're up skiing and you are going down the hill too fast and you run over a kid and injure them. That's a liability claim where your homeowner's policy is going to pick up. So anytime you cause injury or property damage to somebody else unintentionally, then your homeowner's liability is going to pick up that exposure.
When you talk about structuring for the maximum limits, to be able to cover that, you talked about maximum on the auto insurance, and then an umbrella policy on top of that. What does something like that look like when you do it? As far as what are the limits that you typically have to have on the auto before the umbrella policy kicks in?
Yeah. So it's going to vary a little bit by company, but as a general rule, most companies are 500,000. So once you have to have at least $500,000 of underlying limits, which is your auto policy, and then you'd be eligible to purchase an umbrella, which those generally start at an additional $1 million. So combination of those two would give you your total coverage. So $1.5 million of coverage, auto and umbrella, if you had an auto accident. Same thing on the home. Most are going to be 500,000. Some will be $1 million. Some will be 300,000. But you want to be in that range, and then have the umbrella on top of that. So you're at 1.3 or 1.5 or 2 million of total coverage, because it's going to pick up your underlying plus the umbrella.
One of the things you mentioned previous it's one of the cheapest attorneys you can hire. Mm-hmm. I don't think people realize what they're actually purchasing with that policy. If the insurance company's on the hook for 2.5 million, how many attorneys are they sending?
They're going to have a whole team. And what's great about that is, let's say you do have 2.5 million. All of the costs of those attorneys are paid for by the insurance company to defend you in that lawsuit. If they settle for 2.5 million, you're settled in whole, and the company paid for all of those attorney costs to defend you. That did not come out of the benefit that you have. So that is why that's the cheapest attorney you can purchase, because an umbrella, let's say you have 2 cars in a home, which is the most common, American household, assuming good drivers and things like that, an umbrella could be as low as $200 or $300 a year for an additional $1 million of coverage. You can't even hire an attorney for 1 hour for $200 or $300 these days. So let alone trying to defend you hours and hours on end. So that's why I say it's the cheapest attorney you'll ever buy. It's amazing coverage.
They hire the investigative firm. They hire, everything is covered at the insurance company's expense, because
that is correct.
They're now on the hook for that 2.5 million.
That's right.
And so they're going to do everything to really protect you, because it's their bottom line that gets hit if it goes to the max limits on these.
Exactly. And one other factor that a lot of people, if I may, that don't even think about is, when you have an umbrella, you can, if you get sued, if you have a horrific accident or whatever, as bad as that is, you can offload all of the stress, all of the negotiation, all of the repercussions that would come with that if you had to defend yourself, because that would last probably 2 or 3 or sometimes 5 years process to get that claim settled. You're going to be dealing with that for the next 5 years of your life. When you have an umbrella, you can offload that. You give your statement and turn it over, and you probably never even hear from the insurance company again, and you move on and you live your life. So that's a complete another part that people don't even think about, which is an amazing part of the umbrella.
Right. So it not only has it protected your assets that you have, the home, the bank accounts, the cars, but by structuring it in that way, you've also protected future income from being at risk. It protects me from everything, and it eliminates the stress. Now, a couple of things that a lot of times people don't think about. If they have a mother-in-law apartment and they're renting out the basement, or they're Airbnb-ing the property, or whatever it might be, does a standard policy cover those sorts of things, or do they need add-ons?
So it depends. It's carrier dependent, but most of the time they're going to need an add-on or an endorsement to pick up that additional exposure. And that's just, again, another layer. If you have a pool, for example, that's another opportunity to have a liability claim your come way if you've got friends over and they're injured, or something happens in the pool. Another reason to purchase even more coverage, because you're putting yourself at risk in those situations.
Hit some hidden gems that very few people know about, understand what they are, that I want to talk about a little bit. The first one is PIP. What is PIP?
Yeah, good questions. Stands for personal injury protection. The nice thing with PIP or personal injury protection is it's included in your auto policy, so it's mandated. Doesn't matter what policy you have, you're going to have some PIP coverage in it, as it's a Utah law, and that's going to pay out medical benefits to you or anybody in your vehicle before they have to determine fault status in the claim. So you're not waiting on 30 days or 60 days while they investigate the claim to see who was actually at fault. You can go get the care you need right up front and have coverage to do so, not worrying about who was at fault and trying to figure out who's going to pay for that. So every policy has it. It's all afforded. That way, somebody's not waiting and having further problems by not getting the care they need if they're injured.
My understanding is state of Utah is 3,000.
That is minimum. Yep, minimum limit is 3,000.
Okay. Can you purchase more? And if so, how much is it?
Yeah. So again, carrier dependent, but most carriers are going to be 3,000, 5,000, or 10,000. Some will give you 15 or 50 or even up to $100,000. That's kind of the top end of where those typically come in. Knowing that you have another policy that's going to step in and help medically as well, which is your health insurance. So your personal injury is going to take care of the first benefit, and then health insurance should come in behind that. So most people have somewhere between 3 and 10 because that's about what your deductible is on your health insurance. It's very inexpensive, not a large amount. It does have some other benefits, like it'll pay, if you can't perform household duties and there's some lost work included in that, but those are pretty minimal. The major benefit is the medical portion.
Okay. Now that one doesn't surprise me that very few people know what it is. The one that is a little bit more surprising to me is uninsured or underinsured coverage. Very, very few people have this or even know what it is. What is that endorsement on a policy?
Yeah, so that's you're referring to your auto policy in that regard. So it's a piece of your policy that's going to step in if you're hit by somebody that is uninsured. That's going to cover if they have low limits and then your costs are higher than that. Your policy can step in and cover that. Now your company is going to make you whole when you have that coverage, but they're probably going to go after the other party, assuming they have assets and ability to reclaim those costs. So that's a very, very important piece of the coverage because a lot of people don't understand that, like you said, and they decide, well, I don't need that. I'm going to assume everybody does the right thing and has the proper coverages and going to take care of me. I don't need that coverage. So people that go online will forego that, and then those are the people that really need it. In fact, we work with a prominent attorney firm here, and they pretty much just do these claims all the time, and that they say that is the most important coverage out of any coverage on the auto policy because it's the one they're dealing with all the time.
The percentage of underinsured is much, much greater. Than the uninsured. Say probably the majority of people are probably underinsured. And that's what makes that part of your policy so powerful and so important to protect you. And it doesn't cost that much more a month to put $250,000, $500,000 of underinsured coverage on your policy.
It's very inexpensive. I will say most carriers are going to require it to match what your you can't go higher than what your liability limit is. So you also must bring up your liability, which does carry a little bit more cost in doing so with your policy. But the actual cost for increasing your uninsured and underinsured is not bad at all. Definitely worth it.
It is very, very much so worth it. A lot of people being made whole because of their underinsured coverages that they have. And clients that I have that are outside of the state of Utah, so we've had those conversations. I always tell them these are some of the things that you need to go do to bolster their policy to make sure that they're covered in the event that the other person isn't. All right, let's talk about some examples of industry stories that somebody is uninsured, they're at fault. what happens?
So just to make sure I understand, somebody's carrying low or no insurance,
Hmm.
driving, and they cause an accident. Is that then what
Yes,
happens to them? So
that
in a
is it.
perfect world, if the person that they hit all good coverage, then their insurance would step in and cover them to make that person whole and get them back to a sense of normalcy. But when that happens, the other carrier had to pay out in a situation that they shouldn't have had to pay out in, right? So they're going to go back after the original party, the at fault party, and try and reclaim any costs that they can. So that will depend on if that client has assets that are accessible, how much money the company has to put into attorney fees and investigation fees and trying to reclaim that money from that party will determine how hard they're going to go after that. But you're talking about a company that's a for-profit company that had to pay out a lot of money that they shouldn't have had to pay out for. And so the likelihood that they're going to make every attempt to reclaim that money is pretty high.
So it actually, in saving money, could wind up costing you a lot of money.
Yeah. It could cost you financial ruin for sure.
Story of our household in regards to how policies are structured. It was about 6 years ago. My daughter, she's riding her bike around the neighborhood, and there was a driver who wasn't paying attention and ran into her. So she got hit by a car, broke her femur. Fortunately, she had a very good helmet on, so her head was protected. Otherwise, we would have had some major problems there. He had only $25,000 in coverage. That was his max coverage. We get to the emergency room. Looking back, I probably should have had the ambulance take her with a broken femur, but I didn't at the time. So I get to the ER and I go in and I let them know. I was like, hey, my daughter is in the back of the car and she has a broken femur from getting hit by a car. I've never watched so many nurses flip their nut so quickly in my entire life. They started hitting buttons and everybody came rushing, and they're saying you're going to hear a lot of things over the next little bit, but what you need to understand is that every resource in the hospital is now available to your daughter, no matter what it is. Well, when they start to say those sorts of things, the bill just went through the roof. They ran CT, they ran MRI, they ran, if there was a test, it was run. Within the first 45 minutes of being in the hospital, we eclipsed $50,000. Just instantly. That was before they even put her leg back together, before the surgery. All told, that incident bills, we were about $125,000 in medical expenses, just from a broken leg. Granted, it was the femur, but he did not have the coverage. So what ended up happening is our coverage stepped in. So what you mentioned earlier about assets, he had about $180,000 in equity in his home. And the attorney is going through listing out all the assets that this guy has. And I have X number of dollars in underinsured. So that's where we were looking at. That's how all of the expenses were taken care of. Not really thinking through the backside of it is they're going to go look to recoup the costs from him still, even though we had the coverage. He was woefully underinsured with everything that had happened. In addition to that, she's had to have several surgeries to correct bone growth. And so, I mean, we're well beyond $125,000 in coverage. I didn't have to worry about any of that because I knew, based upon how our policies were structured, everything was going to be covered, and not having to deal with any of the headaches. We let the attorney take care of it. We did what we needed for her, and life was fine. It continued as normal. That's the big thing when we're looking at the PNC policies is it's an extremely important part of building a moat around your fortress where you're housing your wealth. In the olden days, they lived in their wealth. They built castles and tall walls and moats and drawbridges because they lived their wealth. Today, it's a little bit different, but it's still the same idea, but the tools are a little different. So now we're using insurance policies. We're using different types of vehicles to protect the current cash flow, future cash flow, and the assets that you have created to take care of the things in the future that you are wanting to have and do. Tori, is there anything else you'd like to add? Any other stories or comments that would help people that are listening?
And that was a great story. Great that you had to go through that, but great that you had prepared for that. And it probably made your life a lot easier knowing the insurance could step in and you guys could concentrate on your daughter. I can't imagine how much additional stress you would have been having, thinking, I'm going to have to try and go after this guy and get that money, and would have diverted your attention away from where it needed to be, and that needed to be on your daughter. So
it was a huge relief in walking in and knowing as they're pushing alarm buttons and everything that they're talking about, I knew money wasn't an issue. Like it was no big deal. Everything was going to be covered, so we could focus where we needed to. And it was a blessing, that, and a huge stress reliever. And so I am a huge firm believer in properly structuring your property and casualty. It's a game changer.
100% agree. If I could say anything to your audience, is just buy as much insurance as you can possibly afford. Nobody wants to be insurance poor, but a properly structured plan will bring a ton of peace. Life sometimes comes at you pretty fast and you don't know what's around the corners. Being prepared for that can make all the difference in the world.
All right, Tori, thank you for joining us today. And if those listening, if you've learned anything new, you liked some of the content, please hit the like button, leave us a comment.